This is the AI News Flash for April 29th, 10 p.m. UTC. But first up, Amazon reported the biggest jump in AWS cloud sales since 2022 in its Q1 earnings, with AI demand finally translating into top-line revenue at scale. According to Bloomberg, AWS revenue grew sharply year over year, beating Wall Street estimates. CEO Andy Jassy credited the $50 billion OpenAI partnership and Trainium custom AI chip rollout for driving the growth surge. Deadline reports that the earnings call even included a shout-out to the film Project Hail Mary, hinting at Amazon's deeper push into entertainment AI. With hyperscaler Capex topping $650 billion and ROI pressure intensifying, AWS is now the clearest monetization story among the cloud giants, sharpening its lead in the three-way battle with Microsoft Azure and Google Cloud. Next, Meta Platforms raised its 2026 AI spending forecast to between $125 and $145 billion in Q1 earnings, sending the stock sharply lower in after-hours trading. Yahoo Finance and Deadline report the new range exceeds prior expectations by $10 to $20 billion, reflecting CEO Mark Zuckerberg's all-in commitment to the superintelligence lab. Q1 daily active users came in soft due to internet disruptions in Iran, layering geopolitical risk on top of mounting AI investment burden and rattling investor confidence. Combined hyperscaler Capex from the four major players is now on track for $700 billion in 2026, intensifying institutional skepticism about AI monetization timelines as earnings season unfolds. Third, Microsoft delivered strong cloud growth in Q3 earnings, but lingering questions about AI investment returns remain, according to Wall Street Journal analysis. Azure AI revenue continues its rapid climb, but the Capex burden squeezing operating cash flow mirrors the same structural challenge facing Meta, Alphabet, and Amazon. As the OpenAI partnership shifts toward non-exclusive cloud arrangements, Microsoft is recalibrating its strategy around in-house model development alongside infrastructure provision for multiple AI companies. BBC reports that big tech stocks are swinging widely as investors probe AI spending levels, with the tug-of-war between proven monetization and demands for further investment fueling market volatility. Fourth, Visa shares soared after Q2 earnings, as investors reframed the company as a winner in the emerging era of AI agent-driven payments. Investors Business Daily reports, Visa is positioning its card network as the foundational rails for autonomous AI agents executing transactions on behalf of consumers. Standardization of agentic commerce infrastructure is heating up alongside MasterCard's Agent Pay and Stripe's payments protocol, with major financial infrastructure players locking in advantage at the payments layer of the AI agent supply chain. This contrasts sharply with ad tech, where Omnicom is testing intermediary disintermediation, while incumbents in payments are moving early to integrate with AI agents and defend their entrenched positions. Well, finally, parents of children who died after AI chatbot interactions are escalating their push in Congress for stricter regulation, putting the Bipartisan Guard Act in the spotlight. Axios exclusively reports that families are meeting directly with lawmakers to demand federal-level transparency requirements and mandatory safety measures for AI companion use by minors. A Cato Institute commentary critiques the Guard Act for placing policymakers, not parents, in charge of children's AI use, signaling that compromise on regulatory design will not come easily. More than 78 chatbot safety bills are already moving through state legislatures in Oregon, Washington, and elsewhere, and reconciling federal frameworks with the patchwork of state laws is shaping up as a major issue heading into the 2026 midterms. That's all for this AI News Flash.